which right now, and we should probably spend a little bit of time talking about fraud because it's a global problem right now with banks and financial institutions, just given the sophistication of some of the fraudsters out there. So having a more modern tech stack allows you to fight that in a much more
It's so true.
sophisticated way. And then the operational efficiencies, so your ability to actually deliver at a very low cost is largely determined by how automated you are and how sophisticated your processes are.
Yeah, I don't think even many bankers are really across the fact that these are credit risk, which you've talked about lending, and we'll get into credit risk, but general fraud management. I don't think many traditional bankers are aware of how big the gap is opening up between technology players and traditional players in terms of managing this stuff. We see consistently now. You'll remember 10 years ago when we're both in the trenches trying to build our banks, and you would hear consistently from the traditional segment of the market, these guys are never going to be profitable. They're only growing at with big growth numbers right now because they're so small, and they're never going to be able to manage risk as well as we can. And we know that those three elements are demonstrably false now. We know that challenger banks as a class, at least the ones that get to a certain critical mass,
Hmm. Hmm.
are performing better on all of those things. The operational cash efficiency is clear. Credit risk management tends to be better because it's a data modeling problem. Profitability is emerging across the segment
Hmm.
right now. But let's talk about some specifics on that in terms of the lending stuff. Are you guys seeing benefits scale now on the fraud and lending side because of the data models and because of the tech stack?
100%.